Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Bob Bridge of the Southwest Angel Network. Bob, thank you for joining us.
It's good to be here with you, Hall.
Thanks. And so, what was your background before you started investing in early stage startups?
I had a PhD in computer engineering a long time ago. Most of what I learned, I guess, is now obsolete. I did 30 years of high-tech startups, mainly in semiconductors, computer hardware systems, things that required $20 million for an MVP. And it wasn't something I wanted to continue to turn the crank on. I turned that crank on a number of companies and decided I'd rather do something different. So I put together the Southwest Angel Network, which is focused on investing in early stage social good, social impact companies.
Great. So why did you choose social impact companies to pursue as your investment thesis?
So I've always cared about giving back, taking care of people, always concerned about people who've been taken advantage of unfairly. And so it just seemed like a really natural thing to do. And Austin has a lot of angel investors who do more traditional tech and consumer packaged products. And this is an opportunity to have a vertical market focus that really wasn't being addressed in Austin.
So for those investors who are thinking about getting into impact investing, what would be your advice to them about joining this sector?
Well, I guess we don't look for unicorns in this space so much. We expect to make a financial return. But we look for two bottom lines. One is obviously the ability to provide a financial return, but just as important is having the companies convince us they can have a positive impact on societal or environmental problem. So we look for both bottom lines equally with equal due diligence.
So how is the impact sector evolving? It seems like it's getting a lot of interest and a lot of people coming into it. Where do you see it going?
There's a lot of interest. There's a couple of big impact angel networks in the U.S. Social Venture Circle has like 300 members. Tonic has several hundred members at least. And especially with next generation investors, younger investors, they're really concerned about giving back, leaving some sort of legacy that's more than just making a buck. And so, we see a lot of interest growing there. Austin has 4 different accelerators with some degree of social impact focus in them, which is also very interesting. There's just a lot of momentum gaining in this space.
So for investors who are going into this space, what should they keep in mind when they look at an impact deal? How would they analyze that more differently than they would non-impact deal?
It's easy to say, oh, what a nice idea. They're going to do something nice here with their technology to help some people out. But my favorite word is efficacy. Show me that you actually having a positive outcome. There's efficacy in what you're doing in terms of impact. We had a company come to us and they had some improved tools for STEM education in public schools. And we said, well, convince us that your tools have better educational outcomes than the tools you're competing with. And convince us you know how to sell to schools, which is very hard, because if you can't sell to anyone, there's no efficacy either.
Well, great. So as a group, at the Southwest Angel Network, what's your investment thesis for impact investing? More specifically, what are you looking for there?
So we have a network, not a fund. So funds have to have a very crisp investment thesis often. And I would say that impact is in the eye of the investor. And we have many investors in our group all have a different view of what is important. So we don't try to identify impact sectors that we will accept and not accept for the most part. We expect the companies to come in and convince us that they have impact. There are some things that we don't really look at very closely, like pharma and medical devices, because they require so much cash and we don't have much expertise. But we're very open to companies. We see them in the companies working to improve educational outcomes, healthcare outcomes, protecting the environment, empowering disadvantaged groups, which sometimes is done through fintech or some other approach. Those are the kinds of sectors that people come and apply to us. And we're accepting all those applications, but we say, convince us there's efficacy in what you're doing on the impact side.
What are some example startups that fit that thesis there?
In the environmental space, there was a company, Flow Below, and they are improving the fuel efficiency of long-haul tractor-trailer cabs. by putting aerodynamic fairings around the drive wheels. So they can improve fuel efficiency 1 to 1.5%, which also decreases the carbon footprint. I mean, that's environmental ones, the impact is probably pretty easy to see most of the time. Another company, 117 Media, they have a mobile app for youth, K through 12, different apps for different ages, of kids who are feeling upset in the classroom and are being disruptive. They can get on this app, they can share how they're feeling, they can start ventilating, they can start getting a little bit of self-help. After 20 minutes, they're feeling much better and they're ready to go back into the classroom without being disruptive. So, that's focused on social emotional learning and providing safer schools.
So what are the challenges in investing in this space? You talked earlier about finding efficacy, but beyond efficacy, if you did find one, what would you think is the major challenge investor faces in the impact space?
We see early stage companies for the most part. Most of our investments are pre-seed or seed. And these are young teams. It's just like other kind of market segments. Young teams have lots of risks and lots of unknowns. And a lot of them can't really demonstrate much evidence what they're going to do on the impact side is going to be effective. And so it's just hard to evaluate any early stage company. The risks are high for every startup at that stage.
So within the world of impact investing, what are the immediate opportunities to pursue? Which particular subsectors you think are going to be the best place to go look for good deals?
Well, I would say that any kind of company that's selling to public schools or selling to hospitals have really hard sales challenges. So those are concerning. There's a lot of opportunities in healthcare. We see a lot of healthcare companies, and we want to make sure that those healthcare companies are servicing a broad set of customers. We had one company come in, and they had this really interesting advance in terms of medical treatment, but their product wasn't going to be available for reimbursement by Medicare, Medicaid insurance. So it was self-pay, right? And so the number of people they could help in the U.S. might be 1,000 a year. So, we're always looking for the maximum impact from a quantitative point of view. How much impact for a person and how many of those people are there that are going to be impacted? And that gets back to putting a quantitative metric on the efficacy measure.
Well, that sounds good. So in the last few minutes that we have here, what else should we cover that we haven't?
No, I think that there are, at the Angel Capital Association, there is a monthly call to syndicate impact deals back and forth. I happen to actually be the moderator for that call. There's also, ACA has brought up an impact landscape that allows you to see impact investors all over the country. And that's also a valuable tool, I think.
So how best for the listeners to get back in touch with you?
I would love to get an email or a text message, bob.bridge@swanimpact, SWANIMPACT.org. My cell phone, 512-658-2240.
Great. We'll put those in the show notes and look to have you back for an update soon, and appreciate your taking time to talk today.
Thank you, Hall. Appreciate it.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.